Hey, what's going on, everyone? Today I am going to show you how to read your daily bias. Um, this is going to be in regards to internal and external range liquidity, and this is probably going to be an eye opener for a lot of you. Once you understand this lesson, it's going to make your daily bias super easy. So make sure that you are taking notes for this one. I just got to repeat, I am not a financial advisor. I'm only showing you for entertainment purposes on what works for me. I'm teaching you on what I learned on my own journey. So, previously, I showed you how to understand the market maker models. So, I'm just going to do a quick recap. If you haven't watched that video, make sure you look for the video that's titled Understanding the MMXM Model. All right, so what we have in front here, this is just the kind of like the pattern of what a market maker buy model looks like. This is going to be the buy side liquidity. Uh, Here, change this to red. We get a sweep. All right. So this is the manipulation. We sweep liquidity. We have a change of structure here. And then this is the distribution. And we're targeting the buy side liquidity. So again, if you haven't seen that video, go back and watch the understanding the market maker buy model, or market maker model recap. So the market, the way it moves is it goes from internal and external liquidity. Internal range liquidity is defined by fair value gaps, and external range liquidity is defined by highs and lows. That's all the market cares about. When external range liquidity is taken, then a fair value gap or internal range liquidity becomes the next draw. And when a fair value gap is tagged, an old low or either an old high, meaning external range liquidity, becomes the next draw. So price only does two things: it draws to an old low or an old high, or it rebalances into a fair value gap. And then I kind of typed something out that way y'all don't have to rewind that part of the video. So let me just put this here, and then um, you can pause it, and let me just add this to it here. This is what it does. I'm gonna put this. So yep, it goes into external range into internal range, or vice versa. It goes from internal range to external range liquidity. Now, if you understand this and you look at it on, you zoom out and you look at the higher time frame, you can do this on the monthly, on the weekly, and on the daily 4 hour or the 1 hour This is the key that you've pretty much all been looking for to read your daily bias. Now, remember, time is fractal. So the way that I like using it on the daily levels, and then I use my 1 hour as my structure. Then I zoom in and I get my entries on the 1 minute. If you're trying to use the weekly levels, you can use the 4 hour structure. And then the monthly levels, if you're going to be more like a swing trader, you can use the daily as the structure. So I'm going to go ahead and show you some examples here. Let me delete this stuff. So, as an example, today we want to target one of the highs. So, I'm going to label this high here. These highs on the 1 hour time frame, we're on the 1 hour time frame. These highs is external range liquidity, and it's buy side. So, external buy side. Now, this is a retracement. This is what I marked as my POI this morning. I also made a video of that execution. But here are your fair value gaps. And there's going to be a lot more details. I'll try to create other videos for this because you also have to include, for my executions, I include SMT, CSD, and time. So I'll create other videos to kind of sum it all up. But for now, we're just going to focus on internal and external range liquidity. Um, so once you go in, once you get a pullback on the 1 hour, you're going to zoom into your 1 minute. And now, if you see, this is the highs that we were targeting. You get your sweep of liquidity. Get your entry. This is the your order block right there. Put it at the low. You target the highs. So you should be able to hold. You can take partials along the way, and you can target the external highs. So I'm going to just show you a better example in case that wasn't a good example here. All right, so we're gonna do this one here. So this is the high on the hourly. This is external range. External buy side. And then we're gonna rebalance. We go into a fair value gap. Once we go down into a fair value gap, once we retrace into a fair value gap, we're going to look for an entry. And then when we get an entry, we're going to target these highs. They're the London highs. So now I'm going to zoom in to a 1 minute. So this is the 1 hour fair value gap. I would look for an entry. I'm not gonna go too much into details. I'll show you in another video. But normally, the macro time that I would look for is around this time here. Depending if there's like SMT and whatnot, I would look for an entry around this time frame. If I don't find an entry, I just let the trade go. But um, we're retracing on the lower time frame, and then you find your entry, and then you're going to target the external range liquidity, which it would be these London highs here. Let me zoom out and see if I find a better example. We can even go to the daily. So here on the daily, we're retracing here. We tag this fair value gap. And this is the low of the internal range. So if you look at the bottom of this candle here, this is internal range liquidity, the bottom of that candle. I'm gonna highlight it yellow, and then we're gonna target the high, these equal highs on the daily. That's buy side. So I'm gonna label it buy side. So this is external range liquidity. So this fair value gap is internal. This low, I'm going to mark it as the internal range liquidity. And then the external is up here. So now what you want to do, depending on what your time frame alignment is, for me, I would drop down to the 1 hour. So if we zoom in on the 1 hour, this is the low. This is internal range. It sweeps it. And you can see that we go from, this is the sell, the algos in the sell program. Once we sweep that liquidity, your eyes should immediately look for the external range. So we're going to sell program, and then once we sweep it, we're going to go into a buy program. And then you can look for whatever your entry model you prefer. This is an inverse for value gap. If you want to, as soon as it closes, you can target the highs. Um, but yeah, I mean, those are some examples. Feel free to look at your own charts. Um, look at the daily levels, weekly levels, the monthly levels, 4 hour and 1 hour levels. So I hope this helped you, and please like the video and subscribe.